Okay, session has been recorded and it will be available to you guys afterwards as well for revision, because this one is going to be a good session to go to when it comes to your exam revision. So what I'm going to do for you this evening, in this evening's collab, is I'm going to go over the answers or the memo to the assignment that you guys have just completed. Where is my mark list so I can just quickly have a look? So most of you who completed the assignment actually did very well. I was very happy with the results. There was literally only one or two students that battled a little bit, and even then it wasn't by too much that they battled. So far so good. So we're going to have to just keep working as well as you have been so far for your next assignment. Remember, your second assignment will go up to, have I got the right book? Yeah, your next assignment will go as far as the end as of learning, as will go up to the end of learning unit 6. I'll get that in a minute. Okay. So if you have got your assignments, hopefully you've got your assignment in front of you, your question paper, or I don't know whether you've got your actual assignment that you did in front of you, and then also go and compare this to your assignment that I uploaded, the marked copy of your assignment, so that you can then, because on your copy, on your assignment, when I marked it, I would have written a lot of commentary as to where you went wrong and where your errors were and what sort of things to look out for. Okay. So I'm just briefly going to scroll through the actual questions themselves, but that's really just to give everybody just a very quick refresher as to what each question was. Because hopefully you've got the question paper in front of you, and you can review that as we're going along. So this is just for those who don't have, or watching the recording afterwards, that don't have the question paper in front of them. So this question we had, Buhlahlo was a qualified fashion designer, wanted to start her own business, wanted some advice on the different forms of business. So this was the important word here, the forms of business that are available to her to start her own business. You had to recreate this table below exactly like this. 3 columns and the 5 different aspects, and then in each little block you had to describe a sole trader's legal personality, describe a partnership's legal personality, etc. Contrasting the differences between the 3 different forms of business. Then Buhlahlo also requires 100,000 Rand to start her business financing. Her father agreed to provide her with 50,000 Rand as capital, and in return she will pay him 2% of the profits that she makes each year. SABSA Bank agreed to provide her with a loan, which she will pay off in 5 equal installments, and she'll also have to pay 10% interest per annum. And then there are also 12 Miss South Africa contestants that have ordered evening dresses from her. So from the scenario above, you had to identify 3 users of financial information and explain how they benefit from accounting information. Okay. Always pay such careful attention to the way questions are worded. Then question 2 for 25 marks, following balance has appeared. So we've basically been given a trial balance. And in that trial balance, they didn't indicate to us which balances were credits and which ones were debits, just gave us the amounts. And then we had to do a table headed with the 5 elements of our financial statements. And we had to list under each one of these headings the account name that belonged under each of those headings. And then, using the balances given above, you had to work out these 5 different totals. You had to identify from this little scenario who the debtor in the scenario was and who the creditor is. So you can just read it again. This is the business, Argon Traders. They sell goods on cash and credit. Only one customer buys on credit, and that is Amethyst Traders. And Argon Traders buys on credit from a company called Granat Traders. So in this one, the people that we buy goods from are the people that we owe money to. The people that we owe money to are our creditors. And the people that we sell to on credit, they owe us money. So the people that owe us money are our debtors. So our debtors are the people who owe us money, and our creditors are the people that we owe money to. And then in your own words, explain the difference between debt and debtor. What is a debt and what is a debtor? Then question 3 for 25 marks, complete the table below. So this was VAT calculations that you had to practice. They only gave you one amount out of the 3, and from that one amount you had to work out the other 2 missing amounts. Here you had to identify which VAT category these different items belong to. And this was a match in the column with a description. Oh my goodness, this one here, I was very disappointed. Question 3.4. So few students got this one correct. I think actually that there was only one student that got this one correct. It was one of your learning objectives. Remember, I explained to you guys your learning objectives given to you at the beginning of each chapter. Those are the questions that they are going to ask you. And that indicates to you what you have to study. So the 2 bases, this was one of your learning objectives, and everybody got that wrong. Following amounts have been provided to you. All amounts included 15% VAT, and we had to separate these into input and output VAT. So obviously the output VAT is VAT that is payable by our company, and input VAT is the VAT that is refundable to us. So we had to work out the rand value of the VAT, add up all the input VAT, add up all the output VAT, and output minus input would then tell us what the net amount is that was payable or refundable. Also was a question that was quite badly done. Students just didn't seem to quite know exactly what to do with those amounts. And then the last one, for 25 marks, fashion designer is a VAT vendor, only trades with other VAT vendors. We use the perpetual inventory system, which means that we have to always work out cost of sales for any sales transaction that we have, because we must always update our inventory with each transaction that we do. And we mark up our inventory 25% on sales. So that means our GP, gross profit percentage, is 25%. So sales times 25% is how we calculate our profit. So remember, in this instance, if it is 25% on sales, then sales is the 100% value. Profit is 25% of sales, and our cost of sales will then be the 75%. So it will be cost of 75 plus markup of 25 equals sales of 100%. Because if profit is 25% of sales, then the other remaining 75% of sales is cost of sales. All cash is deposited daily. And they gave us transactions for the month of January. They gave us balances as at the beginning of January. Bank had an opening unfavorable balance, which means we were in overdraft, and we had a petty cash amount that we opened with. They gave us the total of the cash book payments journal for the month of January, and we had to complete the cash book receipts journal for January. They told us what columns we must head our cash book receipts with day details bank output VAT, and then over the page a sales column as well, and then on the right hand side of that our sundry accounts column, which consists of amount folio details. And then on the extreme right hand side of our cash book receipts, we always have the cost of sales column, which is separate from the rest of the cash book. You didn't have to fill in document numbers or analysis of receipts in this exercise at all, only those ones that they asked us for. So then in addition to completing the cash book receipts, we also had to complete 2 general ledger T accounts. So this is the general ledger T accounts, bank, remember at the top, with the debits, balances and debits on the left and the balances and debits on the right hand side. For the business, the bank account and the petty cash account for the month. Okay, so those are the questions, and I am now going to share my screen with you to go and look at the answer, because I can't load that up on Learn on Blackboard. The particular file doesn't allow me to do that. Let's go back here. Share, where am I? Share screen. Just give me a minute while I click through there. I want the entire screen. Okay, let's just wait a second till we get our little kaleidoscope. There we go, and then I can open the document on my laptop and scroll down to where the memo begins. Okay, so here we go. So just take note, guys, of where you made your errors and where the questions where you lost marks. Please have a look very carefully at the format that your answer should have been presented in, because that's very often where the errors come in. And then also the amount of detail and the type of detail that was included in the question. So this 1.1, it looked like a very easy question, but I was quite surprised. A lot of students didn't answer it very well, because they weren't quite getting the fact that what you put in here had to describe the legal personality. What is a sole trader's legal personality, partnerships, and so on, and so that it was clear the difference between the three. So where legal personality is concerned, a sole trader is not a legal personality, and that's all that you had to put there. A partnership is not a legal personality in its own right, but a for-profit company is a legal personality because it was registered with the registrar of companies, and that registration process is what then makes it a separate legal personality from the owners of the company. So a sole trader, him and his company are one and the same legal entity. Partnerships, a partner's share of a partnership is part of the same legal personality as that particular partner. Okay. Then in terms of startup procedures, a sole trader, there's practically no startup procedures that you have to do. All you have to do is choose a name, and if necessary, depending on what type of business you're in, you might have to apply for some kind of a license or other, but otherwise you just choose a name, print up your stationery, open a Facebook page, and away you go. Where it comes to a partnership, it's also easy to become a partnership, but remember, in terms of startup procedures, the first thing the partners have to do is sit down and draw up a valid partnership agreement, because that partnership agreement is what is going to determine how the profits are shared and who does what in the partnership, etc. So again, they don't register at all. They just choose a legal name and then draw up this legal document called a partnership agreement, whereas your startup procedure for a profit company is that you go and register with the registrar of companies. And then you are in existence. The ownership of a sole trader is only owned by one person. The fact that you have to state one person is important because that's what distinguishes a sole trader from a partnership. A partnership means that there's more than one partner, two or more partners who own the business. And then in terms of a profit company, it is the shareholders who are the owners of the business. And there can be as little as one. So if you go and register a Pty Limited, you can be only one person who owns that company. But there can also be an unlimited number of shareholders depending on how many shares you end up issuing. Then in terms of how are the profits distributed, so in a sole trader, the owner takes all of the profits. Remember, they said the distribution of the profits. All of the profits will be distributed to the one owner of a sole trader. When the profits are distributed for a partnership, they will be split between the partners according to the ratio that is documented in the partnership agreement. And for a profit company, it is the profits are distributed in the form of dividends that are then paid out to each shareholder depending on how many shares or what type of share they own. In terms of income tax, this part here was also not very well answered. Sole trader, the business does not pay any income tax, but the taxable income from the business is added to any other income that the owner has, and he is taxed according to the tax tables of an ordinary person. Same thing with partnerships. The profits are divided amongst the partners, and then their share of profit is added to any other income that they've got, and they are taxed in their personal capacity according to the tax tables for a normal ordinary person. For a profit company, the company, which is a separate legal entity, pays tax in its own name, and it will pay tax at the company tax rate of that particular country, which in South Africa from this year will now be 27%, which was 28%. So in this one, it's really just have a look at how you should go about structuring your answer with a question like this to make sure you put down the information that is required in order to get those 15 marks. Then this one was the one where you had to identify 3 different users of the financial information of the company, and you had to state what type of user they were. So the father, Mr. Khumalo, is an investor, SABSA Bank is a lender, and the contestants are customers. Those were the 3 that we were looking for. So investors use financial information from a company to determine what how risky their investment is and how safe their investment is in terms of risk, and whether they should hold on to their shares or whether they should sell their share in the company. And also they get some kind of idea as to what the percentage of profits, what their dividends are that they're going to receive. A lender is interested in the information to determine whether they are going to get paid back their capital and the interest that is owed to them, whether they will get it paid back and that it will be paid back on time. And then the customers are always interested in financial statements because they're interested in the continuity of a business. If you are going to be a South Africa contestant and you're ordering something from a business, you are wanting to be sure that this company is still going to be in business 3 or 4 or 5 months down the line when those dresses have to be delivered. the company hasn't just collapsed and closed down in the meantime. So it's that continuity that you're interested in as a customer. One or two students did mention Buhlachlo himself as a user of the financial statements, being the owner of the business. That wasn't strictly incorrect, but it also, as you can see, wasn't what they were looking for. We wanted to basically know if we are the owner of the business and we are producing financial statements, who will use those financial statements of ours. Okay, just give me 1 second. Okay, so question 2, this is the one where we got the trial balance. And you had to identify each account correctly according to its element in the financial statements. So most of these there were a few students that muddled up a few things, but most, on the whole, this was well done. There was only one that was a little bit in dispute, and that is this. Oh no, but that comes to the next part of the question, this fixed deposit. Okay, so our assets, land and buildings, vehicles, the fixed deposit, debtors, and petty cash. Equity are always only capital and drawings, and capital and drawings are never going to be anything other than equity. Liabilities, money that we owe to other people, so the mortgage loan, creditors are the people we owe money to, and the bank overdraft is a liability in this case because we owe the bank money because our account is in a negative balance. And then expenses, so the interest that we were charged on the mortgage loan is an expense, and cost of sales is an expense. And we had 3 different types of income: the interest that we received on the fixed deposit, rental income that we received, and then of course all of our sales that we made. Total value of non-current assets. It is always better in questions like this if you put the name of the account as well. It's just easier to see what you've done, both for yourself and for myself. So this particular one over here, the 50,000, there were lots of students that did not put 50,000 in non-current assets, which is the fixed deposit asset. A fixed deposit usually means that that money is going to be invested with the bank for a fair amount of time. So you should really have put that fixed deposit under non-current asset. But purely because in the question, they did not give us the information as to when that fixed deposit was going to fall due, if you included the fixed deposit under current assets, we also agreed to give you that mark, although in all honesty, you should have put it under non-current because of the nature of a fixed deposit means the money is going to be invested for a fair amount of time. Okay, so non-current will be vehicles, land and buildings, and the fixed deposit. And the current assets are debtors and petty cash. Non-current liabilities is obviously going to be just your mortgage loan, and your current liabilities is creditors and bank overdraft. And then using your totals from non-current assets plus current assets and non-current liabilities plus current liabilities, you would have got a total for assets and a total for liabilities, which would then have given you owner's equity, which you know from your accounting equation is assets minus liabilities. So you should have used your workings for these 4 here to then prove your answer for owner's equity. The debtor was Amethyst, the creditor was Granat. So the description, and most of you got this perfectly correctly, a debtor is a person that owes the entity money, and a debt refers to a current obligation or a liability, an amount of money that somebody owes to somebody else. Then our question 3, these were our VAT calculations. I don't have the actual calculations in front of me, but that, I can't remember exactly which one was calculated. Okay. All right. So you were given the VAT exclusive amount, which means the 100% amount before the 15% VAT was added on. So to work out the VAT amount, that's 46,000 times 15% equals the VAT amount. And then if you added those two together, you would have got the VAT inclusive amount. Then with the second one, they gave you the VAT amount. So VAT amount is 15%. So if you divide that by 15, 16,200 divided by 15, you will get 1%. And then that answer multiplied by 115 will give you VAT inclusive amount, or that answer times 100 will give you the VAT exclusive amount. Or you could have worked out either that amount or that amount and then taken that minus that to get the VAT exclusive, or VAT exclusive plus VAT to get the VAT inclusive. And then the last one, they gave you the VAT inclusive amount. So in other words, this amount is the 115. So to get the VAT exclusive amount, we take 170,200 divided by 1.15 to get the VAT excluding amount. And then the 170,200 minus the 148 will then give you the VAT amount. There are other mathematical ways you could have done them, but that's basically your VAT calculation. So practice that, because that's a very good exercise by giving you an example, one example of each, and then you had to work out the other two missing amounts. It's an excellent practice exercise for your VAT calculations. This one over here was just a quickie. You had to do the VAT category. So petrol is 0 rated, life insurance is exempt, and then both white bread, in any context, white bread, and in this case, the kettle, because it was used for the office kitchen for the staff, they were both non-allowable items. I don't think there was anybody that got anything wrong in this one. I think there were 2 students that got 1 item incorrect. Otherwise, this question 3.3, there were no issues whatsoever. Cancellation of sale is a credit note. Goods sold on credit is a credit invoice. If we purchase tea and coffee from petty cash, we use a petty cash voucher. And if we pay a telephone account via EFT, we use an EFT confirmation slip. And when we deposit cash into a bank account, we use a deposit slip. So you had to correctly identify the name of the source document for that particular transaction. Okay, so for your mystery question, what were the 2 bases upon which a business can register for VAT? A business can register either on the payments basis or the invoice basis. Go and look in your textbooks, guys. It's right there. Your textbook is your 100% chief and only important source of information for doing all of these assignments, and as well as revising and learning, swatting up for your exam. You really don't need anything besides your textbook. That textbook contains everything you need, and it's right there. Please pay attention to your learning objectives. And then question 3.4 also asked you, which of the 2 bases, either the payment or the invoice basis, would you suggest a sole trader uses if they've got a turnover of 2 million? So because their turnover does not exceed 2.5 million, then the most suitable basis would be the payments basis, which, and this is just from the timing, from a timing of cash flows point of view, where you don't have to pay the output VAT until you actually receive the money from your debtor that you sold the goods to, and not the day the sale is made. If we register on the invoice basis, it means the day that we invoice our customer, that particular month, at the end of that particular month, we've got to pay to the receiver of revenue the output VAT into the receiver's bank account. Whereas if you register on the payments basis, you only have to pay to the receiver the VAT on your invoices, the output VAT on your invoices, when the month that your customer pays you. So obviously that makes it easier for a small business from a cash flow point of view to make sure that you are never stuck short, not having enough money to pay the receiver of revenue when it's time to submit your VAT return at the end of the month. So this other question on VAT, where they gave you the list of amounts that were including VAT, and they said calculate the amount of VAT that is either payable or refundable, and clearly state whether that total is a payable total or a refundable total. So the easiest way to do this would have been to work out which amounts are input VAT and which amounts are output VAT. You could have worked out the individual amounts of VAT and then added them together. In this memo, they've done it differently. They've taken the including VAT amounts, added them together, and then calculated the VAT on the total, just as kind of like a little shortcut. And our input VAT was 12,420. Our output VAT on our sales and purchases returns was 15,450. So the output VAT was more than the input VAT, which means that we owe the receiver the difference between the two, which is 3,030 Rand. So the total VAT payable on this particular VAT return would have been 3,030. The only tricky one here was the sales returns and the purchases returns. So remember, when you make a sale, that's output VAT. Because you've made a sale, you're obliged to charge your customer VAT on that so that that VAT can be paid to the receiver. But if you reverse a sale, so one of your customers returns goods to you, that means that sale has reversed. So the output VAT on that sale now becomes input VAT, so that you can get the VAT back from the receiver. And vice versa with purchases. When you make a purchase and that supplier has charged you VAT, you're allowed to claim that VAT for refund. But if you return goods, you then have to also return the VAT to the receiver that you previously claimed. So that input VAT then becomes output VAT. And then the last one, which is the cash book payments question. So a lot of you students battled with this one. It is tricky. I have recorded a session only on completing a cash book receipts. I recorded it earlier on today, and I will upload it for you guys tomorrow so that you can follow that in detail. I explain exactly how a cash book gets completed and what each of the different columns are and how you go about doing the calculations for each of the columns, which of these columns are debits and credits, how to work out the VAT, and how the sundry accounts column works, and also cost of sales. So I'm not going to go into long detail about it now, because that will just take up a lot of unnecessary time, because I've got a full hour recorded for you just on cash book receipts that I will upload. In the meantime, you can have a look at the screen to see what the actual amounts of the answers should have been for this question, so that you can compare them to what your answer was. And then also just a note, which was a very common error in our cash book receipts. This first details column over here on the left-hand side, what gets entered in there is either the name of the person or the name of the source from which that money came from. So Petro Stevens is the owner and they contributed cash to their business. So this 10,000 Rand came from Petro Stevens. So under details, you write Petro Stevens. Then this 17,250 was from cash sales. So you should actually write cash. This should be cash sales. So what is the source of the money of the 17,250? It is cash sales. So you write that under details. This 2,500, we received interest from our bank. So you write under details, who did we receive the money from? It came from ABS Bank, so you put their name here, and this is also a cash sale. So only these 4 amounts were cash receipts. There were several students that included a couple of other transactions in here as well. Just to make sure that you can identify, did the business receive money either into their till over the counter or directly into their bank account, and only then does it belong in the cash receipts. You didn't have to do the analysis of receipts column in this question, but in that recording that I've made, I have put a full explanation of the analysis of receipts column in, because it's very important and you might very well get that in the exams. And in any event, you have to understand what is the difference between the analysis of receipts column and the bank column. So in this question, they told you that all amounts are deposited every single day on the same day that the money is received. And that is the reason that the money is in the bank column on the day that we received it. Okay. We only put the money in the bank column when we have physically deposited that money into our actual bank account. And then output VAT is the VAT that we have to charge our customers on any standard rated goods or services that we sell to them. So you will only have output VAT on cash sales. Sorry, this one here should be cash sales. This cash here is not a cash sale. It was a receipt of cash from rent that was paid to us. I also did accept in the details for this transaction on the 12th, that was the rent that we received. If you had have written here rent, because they didn't give us the name of our tenant. If they gave you the name of the tenant under details, you would have put the name of the tenant. In other words, who paid us the money? What was the source of the money that we received? So cash rent or just rent would have been fine over there as well. They told us in item number 12, EFT payment received for rent, and this is rent for a dwelling. So in other words, the business owns a flat that somebody lives in, and you know from your VAT chapter 3, under VAT supply categories, that rent for private dwellings is exempt, which means when we charge rent to those tenants, we are not allowed to add VAT. There is no VAT included on rent for a house. If this was rent for an office premises, then we would have been obliged to add VAT to that because we are VAT registered vendors. Sales, so okay, so we take the amount that goes into the bank column is the gross amount of the transaction. In other words, the including VAT amount. Okay, this includes VAT. Inclusive. Then in the next column, we work out of this total amount, how much of that is VAT and how much of it is the excluding VAT. So in all of these other columns to the right-hand side of the VAT column, all of these amounts are excluding VAT. This is excluding VAT. And cost of sales is also excluding VAT. So only the bank column, and if you had an analysis of receipts column, only those columns do we put the gross including VAT amount. Okay. Then the very first column in our book, we work out how much is VAT, and that gets subtracted from the gross amount so that the excluding VAT amount can then be put into the other columns. And then these two here as well, students really battled with them, and I will try and do a recording on explaining how to go about posting your subsidiary ledgers to the general ledger. It is explained in your textbooks, and if you follow those examples where they've got the full example of completing all the subsidiary journals and then posting the totals of the journals into the general ledger, you will also follow that. The important thing with completing a subsidiary journal, which is our cash book receipts, cash book payment, petty cash, and when you come to learning unit 5, debtors journal, debtors allowances journal, etc., that those journals are the journals where we list each individual transaction that took place. And then we summarize them. In other words, we total these amounts. And it's only these totals, the whole purpose of having a subsidiary journal where we list all the individual transactions and then we total them, is in order to get these total amounts so that it is only this total that then gets posted into the general ledger. So if you'll see here in the bank receipts, in the cash receipts, in my bank column, all of my cash receipts for the month came to a total of 31,750 that was put into my bank account. So when I post into my bank account, here, my total cash book receipts, it's only the total. Under details, I put their total receipts. Under folio, I put their CBR cash book receipts because that's the source that this amount comes from. And I put the total of the bank column in my cash book receipts. You don't go and write all those transactions all over again because you've already done that in the cash book receipts, whose purpose it is to summarize the transactions. So remember, the whole bookkeeping cycle is that a transaction takes place between the business and a third party. There's some kind of source document that records that transaction. We take that source document and we record it into one of our subsidiary journals, which contain similar types of transaction. We then total the subsidiary journals, and then the subsidiary journal then summarizes the receipts, and it's only the total. So that when I come into my general ledger and I read my general ledger, it's clear. I can go and see in the bank, I banked 31,750 this month. And then they told us what the cash book payments amount was. You didn't have to complete that subsidiary journal. So all you had to do on the right-hand side, which is the credit side, is put details, total payments, folio, cash book payments, CBP, and the amount, the 18,000 that they gave us. And then very importantly, you always in a general ledger account, T account, remember it's a T account because it is in the shape of a T, with the debits on the left-hand side, date, details, folio amount, and the credits on the right-hand side, date, details, folio amount. And because they told us that our bank account had an overdraft balance of 12,000, we owe the bank that 12,000. Bank is an asset account which increases on the debit side and decreases on the credit side. So that opening bank balance had to be on the credit side. Okay, so take note, date, 1st of January, opening day of the month. Details is balance folio brought down, amount 12,000. Cash book payments, receipts, date 31st of January. We always post our subsidiary journals on the last day of the month. Details, total receipts, folio CBR amount 31,350. And then you have to balance the account. So remember, going back to, I'll be fibbing to you now if I tell you exactly where in your textbook it is, but you've got how to balance a general ledger account in your textbook. And they give you the methods depending on how many entries there are in the account. But the basic method is that once you've posted opening balance, and in the bank's case, total receipts and total payments, we then total the left-hand side and we total the right-hand side. And whichever one is greater, so on the right-hand side, we only would have had 30,000. 18 plus 12 is 30, whereas on the left-hand side, we had 31,750. So 31,750 is the larger amount. So we write that amount down on both sides, the left and the right. And then we take 31,750 minus 30,000. We find out what the amount of the difference is, and that is the balance in the account. So we need an extra 1,750 on the right-hand side so that the left-hand side and the right-hand side add up to 31,750. And then we write balance carried down is 1,750. And because the left-hand side was the greater side, the balance must be carried down on the left-hand side. So our opening bank balance on the 1st of February is then 1st of February balance brought down 1,750. Which is this is where we calculated the 1,750, and it's brought down on the left-hand side because the left-hand side was greater than the right-hand side. We had 31,750 on the left, whereas we only had 30,000 on the right. So the debits were more than the credits by the amount of 1,750. Please revise that because it will definitely come up in the exams again. And then petty cash also, here's our little T. Petty cash, and we've got left-hand side and right-hand side. Debits on the left, credits on the right. They gave us our opening balance. So petty cash is an amount of money that we've got on hand in our petty cash box. So that is an asset. Assets increase on the left-hand side. So our opening balance must be here on the left-hand side. And then there were a couple of different ways you could have completed this petty cash. Some students did work out what the total amount of the petty cash for the month would have been and then just posted that. And that was actually that's technically the correct way to do it, but because they didn't tell us to complete a petty cash journal and they gave us the individual transactions, you could also have done it like the memo. But generally speaking, we don't do it like this because we have the petty cash journal that contains the details where we would have then put petrol and stationery, and then we would have then posted into the petty cash journal here on the right hand side, 31st of January, petty cash journal or total payments, PCJ, and then the total of those two added together. And then once again, total the left hand side, 3,500, total the right hand side, what's that, 8, 9, 10, 1,375. So 3,500 minus 1,375 equals 2,125. So we've got, remember, you always write down the greater amount, so 3,500 and 3,500. we work out the difference between 1375 and 35, which is 2125. And then because the left-hand side, the debit side, was greater, the balance brought down is then put on the left-hand side. Exactly the same procedure as we followed for balancing the bank account. Okay, so go and practice those. I know they are tricky when you start out with them first of all. So go and practice those. And please, guys, remember always anything that you battle with as you're going and revising these and practicing them. If you're not sure how something works or you don't know how they calculated an amount, in other words, how did they get that 2125? Why did they do that? Send me a message and ask me so that I can help you, and you can then learn quicker than battling on your own. Okay, guys, thank you very, very much for the session, and I hope it's been helpful. And I'm going to go back to my little kaleidoscope screen over here and finish off the session so that the recording doesn't go on for too long. Okay, guys, Milani, I hope that was helpful for you. Thanks very much for taking part. And I'll see you guys again soon. Our next collab, let me just get the date correct, is going to be on Wednesday, the 17th of May. And then that will be our official NSS session for your assignment 2. Okay, guys, thank you very much. Pleasure, Milani. Bye. And I'm going to stop the recording now. Bye, guys. See you next time.